Hey guys, welcome back. Jeb Smith here. Today I have a special guest with me, Michael Zuber. I had reached out to a lot of you guys, did a poll on YouTube and asked who I should do a collaboration with. And a lot of you guys threw Michael's name out there. So here we are today. Michael is a full-time investor now, actually purchased his first rental at 30, retired at 45, I believe it was, replaced two six-figure incomes, and now teaches investing to those that want to get into the investing game. And I know a lot of you guys watching my channel have questions about investing. So, we're going to throw some of those questions at Michael today and let him address them. But before we dive into it, let's take a minute and just let Michael introduce himself. Michael, thanks for joining us on the show. Appreciate you being here.
Well, thank you, buddy. I appreciate it. That's nice to know. I'm glad the one rental at a time, community recommended we get together. We have had a couple of quick conversations. This should be a lot of fun. But yeah, my story is like a lot of your followers. I was a W-2 employee, means I had a stressful day job, family, daughter, and I just wanted a better life, right? I tried the stock market game. It worked for a minute, and then it spectacularly crashed on my head, and I felt all depressed. So, I go to the bookstore and find that purple book, which is called Rich Dad Poor Dad, and it changes your mindset, but it doesn't tell you how, right? So,
no, absolutely.
We just went after it and we figured it out. We happen to live in Silicon Valley, which is ridiculously expensive. And we tried here, didn't work. So we found Fresno, California, where, we started, 18 years ago now. And we've never left. So we're in one market. We've had property managers since day one. The good story, it's interesting, right? Because we've been doing this since 2001.
Okay.
We started with single family homes. We rode the wave up. We couldn't buy that 8th or 9th property because they just didn't work, right? If you've been in the business, you just know how wacky 06 was, right? Late 06.
Absolutely.
So what we did is we went to a real estate meetup, and the guy on stage talked about small multifamilies. I'm like, I got a duplex. He's like, no, you got to go 5 and above, commercial, all of those things. Never looked at them, right? I'd been in the game 8 years by that point, 7 years. Never looked at them. I thought only millionaires could own these things, right? So we ended up doing a whole bunch of 1031 exchanges at the peak. So we get we squeeze all of the juice from the single family homes. We 1031 into apartments. We go from 8 to 80 units. Then the crash happens, crushes single family homes. For example, that first house we buy for 107, we sell for 264. It goes all the way down to 75 grand before it retrades after the foreclosure crisis. So I've been through it, right? And, then the crash happens, we get aggressive, no banks, we find hard money, then private money. And, 15 years after we start, we replace two six-figure incomes. We have nearly 200 units at the peak. And, we're financially free. And now we spend time giving back. So it's kind of the story in a nutshell.
No, that awesome story. And you said a couple of things there that I think are important that we need to dive into. For one, you said a 1031 tax exchange. For those out there that don't know what a 1031 is, Michael, why don't you just kind of give a brief summary of a 1031? Because before you do that, though, because there's some potential changes on the table, right? President Biden, in part of his infrastructure package, is talking about making some changes to the 1031 that could ultimately affect the housing market. And I don't want to get into that quite yet, but let's talk about what a 1031 is for those that are watching that don't know.
Yeah, so we'll do this in 2 steps. We'll set up what it is, and then we'll talk about the tweak that is being proposed at this point. So as the 1031 is when I used it, which we'll just call it 2007, just to put it in time frame. Basically, you are allowed to sell a rental property. So it can't be your primary home. That's a big no-no, right? It has to be an investment property. Right. You can then sell that asset. You can have the funds come out. It has to go to an intermediary. It's called a like-kind exchange. So you can sell an investment house and buy something else. The idea of a 1031 exchange is you as an investor own an asset. It gets depreciated down. You want to sell it. Instead of get hit with all these taxes, you go bigger. The whole idea is the government wanted to incent investors, landlords, to go bigger. That was the whole reason for it. And that's what we did, right? We went from 1 to 5. Then we went from 1 to 8. And these are unit counts. And then once we sold 2 houses and bought a 20 unit. And, those were the kinds of things that we did. So the real reason we did that is, we got bigger. We were able to sell ridiculously expensive houses for underappreciated apartments, our cash flow exploded, right? 8 single family homes is $1,500 maybe,
Right.
$1,800. 80 units in apartment that are bought right, a lot more cash flow. And then the biggest thing is, basically you get to flip the middle finger to the IRS, right? We
No,
get to take all of the capital gains and not pay a lick of taxes, right? You get to move that forward. So the 1031 is a huge benefit to real estate investors. And frankly, that's probably one of the reasons why it's now a target by the current administration, because they need more taxes, right? They are signing up for $6 trillion. And what's it been, 100 days in office? He already wants to spend $6 or $7 trillion. You got to pay for that somehow. So real estate does have some goodies, right? One of them is the 1031 exchange. So there's a chance it goes away. There's a chance it gets modified, because I think, go ahead.
No, I think there's gonna be some give and take, right? But it's part of a larger package, and making it part of a larger package lets some things slip through that, when one party wants something on their side, a little bit of give and take, because, something like this, unfortunately, both parties, have to come to some sort of agreement in order to get it to the table. And so hopefully, the 1031 is one of those things that, is allowed or is changed or modified from the way he's currently proposing it, in my opinion. Plus that, and not only the 1031, the amounts being changed, but the actual tax rate, which I don't know that the tax rate could pass, but who knows at this point. What are your thoughts on all of that?
Yeah, so I think you always have to watch what people do, not what they say. And right now what they're doing is they're putting real estate investing right in the center of how they're going to raise taxes, right? The last guy in office was a real estate guy. And they're like, we're going to go get those son of a guns. We've been auditing his taxes forever. And yeah, he may have done it legally, but God damn it, we're going to close those loopholes. That's kind of what it feels like is going on, right?
I wouldn't disagree with that.
Yeah, so I think the 1031 does get modified, or at least gets adjusted. Right now, the proposal is they're trying to put it in place where the little mom and pop gets taken care of, right? There's a 500,000 limit, right? Which is interesting. I think something like that happens. I think that goes up to $1 million, because basically what they want to do is they want to get Blackstone and American Homes and all of these big behemoths that are doing tens and hundreds of millions of dollars a deal. They want those guys to pay taxes. No more 1031 for them.
Right. Yeah. But here's, go ahead. No,
but I think they want to incent mom, because right now, here's the deal. What President Biden and his administration at least proposed is, I know police officers, I know teachers. I talked to one of them yesterday, never made more than 65 grand. He bought his first rental in 1981. He's about done. And he's looking to sell his 8 houses. And now he's like, they just kicked over the board. I've been playing this board game, Monopoly, for 30 years. And I get within 5 feet of the end and they kick over the board. What the hell? So, I mean, he was distraught. So there are people that never made more than 60 or 65 grand, but because they live below their means, they sacrifice, they bought a rental once every 3 years, they're going to be penalized. Because if you sell 8 houses, you know what? You're going to be a millionaire for that tax year, and they're going to come get you 53%, 39 for Fed, 13 for state.
Right.
Oh, I just feel so bad.
No, it is. And I think so I think the average consumer out there, the average person in America looks at that and goes, yeah, those corporations should be taxed. They shouldn't be allowed to do this sort of thing. As a whole, I think that's probably the general consensus. But I don't think what people understand is that there's effects of large companies not being able to do this rollover in capital gains on large commercial property. So question for you, what happens when you tell the Blackstones, the American Homes, all those big corporations that are doing flipping and not necessarily flipping, but selling assets, putting them into larger assets to avoid taxes or what have you? What happens when the government says, now we're going to hit you for anything over 500,000 on capital gains? Do they now take that money and start looking at single family homes for, shorter term investments where they're not going to hit that? And that adds fuel to this crazy housing market, because these people aren't going to stop investing. They're just going to to go to a different asset, right?
Yeah. So first off, you've nailed one of my biggest pet peeves in all of this. But let's walk through, because there's three things that will happen. And I have an accounting degree, I have a master's degree in business, so I've been playing this game for a long time. So the first thing that's going to happen is all of this proposal is for tax year of 2022, right? So what's going to first happen is people are going to evaluate their portfolios. They're going to see what they may have sold next year. They're going to list early, because they're going to say, I'm going to pay 20 now versus whatever later. Yeah. So that's the first thing. So we may see a very short window of some inventory come on. That I would expect that. That's a good business decision, right? Absolutely. Sell in March versus sell in November. I'm going to sell in November, right? Save some money. Second, then what's going to happen is they're going to start looking at their portfolio and go, that has another year, that has another 2 or 3 years to age on it before it was going to be sellable. And now what they're going to do is they're going to go, we're just going to stay put. That capital is now dead. Right. We're going to wait out this administration, because what happens with taxes is who takes it away, it will come back. Yep. Okay. So there will be some dead money in the system, which means while we'll get a short-term blip in inventory, there will be future inventory that never shows up. And that will be far greater than this little bit that shows up. For numbers' sake, maybe 10 show up early, but there'll be thousands that never show up. Right. So we're exacerbating the problem in the future. But then there's that wrinkle. There's that special 500K number. And what that does is it just puts a micro focus on single family homes. The affordable home, if this goes through, will become the unicorn. It won't exist, because I promise you, there is nobody that needs an FHA loan or a 3.5% loan that can compete with Blackstone who's stroking a check. Right. No, you just won't compete. They just won't exist. I don't care if you get a 40-year mortgage. You won't be able to compete. Yes, a 40-year mortgage can make your payment lower, but you're not going to get a chance, because Blackstone will outbid you, and they'll close faster. Right. Oh my God!
And they're only one player, right? I mean, there's thousands.
Yeah, I'm using them as an umbrella. It does.
It takes. I mean, the big focus everybody looks at is they say, okay, he's doing the right thing. He's taxing these millionaires who are avoiding taxes to some extent, but by the law, they're avoiding taxes, which is completely legal. Nothing wrong with it. Legal. But it's the easy person to aim at right now and take your shot. And so people go, yeah, what's the problem with that? But what they don't understand is the recurring effects of focusing on those people. They just turn that money into something else, and you're going to see it likely hit some sort of housing market. And so I kind of want to transition here, because there's a lot of talk out there, right, about the housing market, and there being, it's being falsely portrayed at the moment. I don't know even if that's the right way to put it, but that we're not having a real market, right? Because there's moratoriums on evictions, there are moratoriums on foreclosures and that sort of thing. And, without taking the tax thing into account, we're not, let's not go there quite yet with the Blackstones and all of those guys and potential properties coming on the market. Looking at the market right now, evictions, foreclosures, thoughts on the housing market as a whole, where we are now. Where do you see, I'm not going to ask you 5 years from now, but what do you see in a year or two based on where we are at the moment and things that you're seeing and hearing and all that good stuff, being an investor?
So the beauty of what I do is I've been looking at my market nearly every day for almost 20 years, right? So I know it better than most. And then I've been looking nationally for a long time as well. So this is when I say today, we got to level set what I see today. Right now, I see a housing market that has an inventory problem. We'll put a number on it of about 1 million homes. That's about what's available today across the country. And just so we can all be on the same page, a normal market in the U.S. is somewhere between 3.3 and 3.7 available homes, right? So we're sitting at 32% of a normal market, 31% of a normal market. So then you have to ask yourself, what I ask myself is why? Why is that? Because it's never been this low. I mean, in my market, we don't count months anymore or weeks. We count days.
Right. Wow.
That's not okay. Right. That's not normal.
No, absolutely.
So you have two things, right? So I think of the market, right? The 3.2 market as just a cup. And what we've done over the last 14 months is we poked holes in the cup, which has just meant inventory just fell out or never came on. For example, the biggest driver, and I think this will change, is what I call the move-up buyer, right? It's the person that would sell one, buy one.
Absolutely.
Right? It's that magic person to understand as a real estate agent, because you could theoretically get two sides.
Yep.
And that stopped. We basically told people, don't let anybody in your house and don't let anybody touch your stuff. That's what we told people. So people didn't have open houses. They didn't list their house. And also, I've been studying the consumer forever. The consumers were scared for that first 6 months, right? California shuts down in March or whatever it was last year. People were like, I don't know if I have a job. I don't know what's going to happen. This, you know, I don't know if I have food. We're going to rush out and buy toilet paper. I mean, just crazy things we were doing, right? I mean,
yeah,
remember,
no,
right?
I witnessed it all firsthand.
Yeah, it's crazy, right? So again, the most important segment of the buyer pool is the move-up buyer, in my opinion. The first-time home to move up, second to luxury, whatever that is for you, that ceased to exist. That's a problem. Right?
And partly because of what you said, but partly because, I mean, and you're probably going to say this, but partly because those buyers, I mean, those sellers who are also buyers are now looking out there saying, I can't buy anything. Why am I going to list my house?
Yeah,
right?
Exactly. That's exactly what they're saying today. That is, I'm hearing that. I've talked to a couple of agents here in the last 30 days, and yeah, they're like, my guys can't get anything, right? There's people want to list, they want to squeeze the equity out. Consumers are simple creatures. They're now looking at their house going, I've been stuck here. It's too old. It's too small. I'm now a director instead of a manager. I'm a VP instead of a director. I got to be in a different part of town, but I can't find anything. So one of the things I would do if I was a real estate agent is I get really good at the lingo of contingent sale, right? That's what I'd be pushing today, right? Let me list your house contingently, right? I'd be pushing that right now if I was an agent, because all consumers are going to feel a lot better in June or July. I'm saying by middle of July, July 15th. This is where I went to earlier, right? With that million, I'm calling right now 2 million available homes by July 15th, which
That's big.
If you're in the business, you're like, holy cow, that's 1 million homes. Dude, I think there's that many people that are like, I don't like my home anymore. I want bigger, nicer, golf course, whatever it is. But here's another thing. You go from 1 to 2 million. Yes, it's 100% increase. But remember what I told you a normal market was? It was 3.3. So we're still 60%, but it's going to feel better, right? In my market today, or actually 30 days ago, junk would sell at retail prices. Junk. I mean, like junk. Now we're starting to see more inventory. Click on it. It's still going fast, but you can see the change. So I really do think we're going to have a lot more inventory. Days on market will go up. The best of the best, the top 10% of houses will still sell over asking remarkably fast, but it's that next 90% that's going to linger. You're going to see price drops because junk shouldn't go for retail. There should be a discount for junk.
No,
but in a market where there's nothing, it's tough. So everything sells.
No, I mean, I don't disagree. I mean, I have clients who are potential sellers looking at inventory saying, hey, look, I'd love to sell my house, but I'm not seeing anything out there. And the contingent sell is an opportunity to get a house on the market. But, I went through a couple actually clients earlier in the year where we had their house on the market. We had buyers on their house and we couldn't find anything. I mean, we were putting in offers, we were doing all the right things. And it was just, they got emotionally drained. It was a headache. It was just a pain in the ass for everyone involved. And they were like, you know what, we're just going to wait. And so my conversation to them was, okay, are you waiting because you think home prices are going to come down? Or are you waiting because you think there's going to be more opportunity, more options for you to choose from? And, depending on where they say, what they say there is one of those things where you kind of direct them. But I will say I'd be really surprised if there were 2 million properties, but you're talking about the entire United States, right? We're not just talking California. We're talking,
that's a national number. Yeah.
It's a national number, clearly. And it's hard to say, right? I have been talking the whole time that I do think the economy is going to, while 2020, a lot of people suffered, had difficult times, a lot of people thrived. A lot of people made a lot of money. Those that owned equities, those that owned property did very well. Now that's not the majority of people out there, but a lot of people did well. And I think there's a lot of money floating around the economy, and a lot of people want to spend money. I mean, I want to spend money. I want to go on vacation. I want to travel. And my group of friends wants to do the same thing. And so I think as restrictions ease, you're going to see a lot of money come into the economy, which is going to be a positive sign. Now, it's not a forever thing. That's not going to be there forever, but it's a short-term bounce, which I think adds to consumer confidence. It gives people, you get people hiring, restaurants open back up, and people outside of California are thinking, well, restaurants have been open forever. No, here in California, it's crazy. I mean, we're just now getting here in Orange County restaurants to 50% capacity because of, the crazy things that have been put in place. So I do think you're going to see people more comfortable. And I think with that, you see property come on the market. Now, the question is, those properties that come on the market, do they have to buy something? Because if they do, then that property coming on the market isn't really, it's not, you sell one, you take one. So it's kind of a trade-off on that inventory coming in. And I've seen that in my own housing market, right? I see inventory come on, but I see just as many properties go into escrow, if not more. And so that inventory never builds. So it definitely an interesting. What are your take on evictions, foreclosures? So you think because we got moratoriums until the end of June at the moment. At the moment, likely extended, maybe.
Well, I don't know. So I think there's really two things there. I think foreclosures is far easier conversation because I think the government's already showed their hand. They're going to bend over backwards. So we don't have a repeat of what happened last time.
Absolutely.
Because I've been doing this since 2001, and I saw it last time. Last time banks wouldn't talk to you unless you were 90 days late. Once you got 90 days late, you were going to lose your house 97% of the time. They are not doing that this time. The word this year is going to be avoidable foreclosure.
Right.
So the people that were calling for a wave of foreclosures and all of these things, and that was going to destroy housing, it ain't coming. They're going to bend over backwards. They're going to lower payments. They're going to stretch payments out to 40 years. There may be people locked in homes like rent control that they can't leave again because they got this big second.
Right.
But there's no inventory coming from this. It very, 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 very little. And any that comes out will be snapped up in a heartbeat. So that's an easy conversation.
Right. And that's where I was going to go before you dive into the next one. That's where I was going to go with the Blackstones and these companies out there that have millions, billions of dollars sitting on the sideline.
Billions.
What happens when you're in this market? Properties have been selling at market value, above market value for a year, and now there's a distressed property. And let's say distressed property actually goes on the market for less than what the market value of that property is. How many people, just take the investor out of it, how many people do you think are going to jump on a property that seems like it's undervalued in a market like this? Everyone.
Well, everyone. I mean, there's a great example.
Drive the price back up.
Oh, yeah. They wrote about an example in Washington, D.C., where a junker, not touched since the 30s. Junker,
oh, wow.
Like the 30s. They listed it at $250 in a $450 market. It ended up going for $470 cash.
Oh, is this the one that received like 87 cash offers?
87 cash offers, and just silly stuff.
Yeah. No, I read it. I didn't read the whole story, but I saw the number of offers, which is incredible. So we're in agreement. We don't think the foreclosures are going to play a part. Now, the hard part here is the evictions. What do you think happens on that front?
So evictions, I own a lot of rentals. And so far, my rent collections, knock on wood, after 14 months is in the 95-ish%. So a little under usual years, because again, I got 20 years experience, but not horrible. I was prepared for much worse. So not horrible. I'm going to say that at least for most of the country, California is always an exception, given our lovely governor. Right. Yep. I'm going to say that June 30 evictions for the nation end. They've already lost a couple of battles, Texas, Tennessee, yep. I think. They've exuded power they don't have and were never given. There will be lawsuits filed, but the legal system is slow to do it. So my guess is CDC doesn't push it past June 30th. Okay. Then you got to go to the state level. What does your state person do?
I think it's September or something here in California.
Yeah, I think it's September 30th now. But I'm not a huge fan, obviously, as you can probably tell.
I think we're on the same page there. But I think a lot of people are. I just don't see
how it can go past September.
Right.
I really can't.
And so what do you think happens? Because then
if you do it to December and then you can't do it over the holidays, eventually the landlord's got to get paid.
So when I've talked about housing market in multiple times over the last year or so, people obviously have their comments and they say, well, when these people get evicted, the landlords are going to be tired of owning property. They don't want to be landlords anymore. So all of this property is going to come to the market, right? Which I don't agree with, but what are your thoughts on what happens when the evictions end? These people actually go through the eviction process. Now you have a vacant property. Does that property now become an inventory for someone else to buy, or does that landlord now go in and make a smarter decision on who they accept as a tenant or what have you?
Yeah, so I think there's a couple of things, and what's really interesting is you got to tie this in with all the other changes we started with, right? Depending on when this eviction moratorium ends, I mean, you could really force an answer of, shoot, I got to keep it because otherwise I get stuck. So I think there's a couple of things. I know hundreds, thousands of landlords, and it's been a rough year, especially for mom and pops. I mean, if you got 6 units and 2 of them are paying, you've been dipping into savings to pay the bills. Because, oh, by the way, I paid property taxes 3 times already, and I have a tenant that hasn't paid rent in a year. Right? Wow. That hurts, and that's happening across the country. But I think what's going to happen is eviction moratoriums will end. We will actually, the U.S. Constitution actually has a taking clause in the 5th Amendment that's supposed to make this not legal, but apparently the CDC can avoid the U.S. Constitution, but whatever. I didn't think that was possible, but it is apparently. So I think a landlord's going to come to the point, they're going to get them out. They're going to say, okay, they can sell it as is, which they won't do because that doesn't do them any good, because I think inventory picks up. They could say, you know what? All this demand from first-time buyers, because that's the beauty of mom and pop landlords. They're usually playing in that the stuff they own is like first-time buyer prime stuff. So I think a fair amount of them are going to say, you know what, we're going to clean it up. We're going to throw in granite. We're going to put in new flooring. We're going to clean up the bathroom, kitchen, make it look nice, and they're going to sell it at retail prices. I think there'll be a fair amount of them, but it won't come out as junk. It will come out as FHA quality, 3.5% down, so they can wring every last drop out. So there'll be some of that. If the number's 100, that'll probably be 30 to 35% of landlords that go, I'm done, but oh, by the way, I'm going to go get his maximum profit.
Right.
And then the other 65% are going to go, wow, that's really hard. I hope we never have a pandemic. The last one was 1918. Let's hope this doesn't happen again. And oh, by the way, rents are up. I mean, that's what's crazy. Houses, my market for houses, my rent's up 25% a year. There's just no inventory. And if prices keep going up like they are, rents follow. I've been doing this a long time. It is going to be, what's going to happen in a year or two is it is going to be a wonderful time to be a landlord for affordable housing, because there'll be no more supply.
Right. And
rents will just explode higher.
No, absolutely. And don't take this the wrong way, because it's not meant to be, this is me thinking outside of the box here, but a landlord that owns a $500,000 property, for example, their tenant, maybe $2,500 payment a month or rent payment or what have you.
25 to 3, somewhere in there. Yep.
Let's say $3,000. So they didn't make their payments for a year. They lost $36,000 as a landlord, but that property is appreciated 15% in the year that they've owned it, not being able to pay rent. So they've gained $75,000 in equity on that property. They can now on their tax returns probably write off the loss of rent. I would think there's got to be a way to write that off outside of the depreciation.
Well, you're not claiming the income. So so the income's not there. So all the costs.
And again, this is not for everyone. Everyone's not going to think like that. But when you're looking at it from a numbers perspective, you've got to have the money to be able to carry that when things were tough. But on paper, I mean, it would have been great had they paid and you got both sides, but you're not really in a far worse position unless you owned a ton of these and really got hit. I mean, and again, I'm not being naive to say that it doesn't suck and that, it would have been better the other way around. But, there were some give and take here a little bit. And at the end of the day, that landlord is probably coming out on top regardless. If they decide to sell or keep it or what have you.
Yeah, as long as they can have the operational wherewithal to continue on, limp through this, every landlord's in a better spot. That is dead on. And that's why I think when you get to the other side and the house is now vacant, because until that tenant's out, you're just upset. You're mad. You're crotchety. I'm going to sell this thing. I hate being a landlord. But then they're out and you're like, oh my God, this house used to be worth 500. It's now worth 650.
Right.
This place is looking pretty good.
Lord do
I
with the
could
money.
paint that. I could do that.
Right.
Yeah.
What is,
and oh, by the way, it's not $3,000. Now it's 3,800. Like, shit, took another tenant in. Let's go.
yeah, no. And you know, that landlord, they sell that property. They have to either 1031 it into a like kind property, right? Which is another
That's
rental
right.
of some sort, or they have to pay taxes on it, which makes them, it puts them in even a worse position financially.
Worse.
So yeah, so I mean, it's good to hear it from somebody that's actually, you know, in the trenches of you know, talking about
Yeah.
investment property, because I think it's important, right? I mean, everybody looks at it's easy to spread fear, especially in a time where nobody really knew what the hell was going on. I mean, you mentioned a moment ago, people had no idea what they were going to do for 6 months. Well, I had about 45 days of people backing out of transactions, listings canceling, things going kind of sideways. And I was going, what, you know, talking to my wife going, what the hell are we like, if this thing goes
I don't know,
sideways,
honey.
yeah, we got savings, but like, you know, I mean, you know, where,
Yeah,
what is it?
I
How long does
remember.
this happen? I mean, when the government says you can't work, you can't do things, that puts you in a position where you're like, I don't know what to do. And so I can only imagine, you know, people in that position, and it was easy at that time to add to the fear out there. And I think a lot of people obviously are still doing that, but it's good to talk to somebody, you know, that boots on the ground, that seeing this inside and out, that, you know,
Yeah.
is out there coming and dropping some knowledge on it, which I appreciate. I
Yeah,
have a question for you. Probably the most
Okay.
common question I get, not common. I mean, not the most common question, but you know, when people talk about investment property, they say, should I invest in a property? Right. So one I get all the time is, hey, I own a property. Should I pull some cash out and buy an investment property? Or, you know,
yes.
I'm looking to start investing. You know, what should I look for? And in my whole, you know, what I've always said, and my go-to is, you know, there's two types of investments, right? You're either looking at a property from an appreciation standpoint, or you're looking at a property from a cash flow standpoint. One of the two primarily. Now, in some cases you can get both. But historically speaking, it's kind of one or the other. When somebody says, hey, the first question, cashing out a property, investing in maybe out of state somewhere, what are your thoughts on that? And then somebody that's just looking to get in investing, what's your recommendation? What's your go-to strategy or conversation with them?
Yeah. Oh, this is going to be good. So first and foremost, people have to realize that I'm more conservative than most. I'm not this maximum leverage, all down, put it out there. Because again, I've been doing this 20 years. I saw this side of the mountain and I saw this side of the mountain. And I got to tell you, this side of the mountain destroys families, it causes bankruptcies, and is no good for anyone. What caused that? It caused, first off, stupid lending. Let's put the blame where it is. But
No,
people
absolutely.
signed those loan docs, right? We signed them. Right? The loan docs were signed by an individual who made that decision and committed to that. And people were betting on appreciation far too often there. So to your first question, I generally don't like taking equity out of my primary home because I grew up in a situation where that primary home was nearly lost several times. So I have that history, that memory as a kid. It's not a pleasant feeling. However, if you're in a situation where you can, you know, borrow from the house and then pay it back in a year or two because you have RSUs or options or commission, or you're doing a BRRRR strategy, or you have a plan, go for it. So I don't, so to be clear, don't you know, if you can get 200 grand, don't use it all. You know, if you're going to use 150 of it, make sure there's a plan to pay it back in 2 years. So that's the first thing. Second part of part one, there are so many people in California that go, I'm going to go to the Midwest because it's cheap. Well, that's a horrible reason to invest. I know lots of people that go broke buying cheap.
Right.
I counsel people all the time, right? If you're not willing to go see it, go visit the city, see your properties, you probably shouldn't put your money there. Again, I've been investing in California for 20 years. I found a market I could drive to. It works. I can't invest in, you know, Silicon Valley, but I can drive to a market and invest. So I think too many people in California or New York or other expensive states just default to the Midwest because they hear it's cheap on bigger pockets.
Right.
That's a horrible reason to invest.
Right. No, absolutely.
Right. So that's that question. Now you get the new investor. What should I do? First off, I'm not the appreciation guy. Yes, it happens. I've benefited from it millions of dollars, but I don't count it. It's like, it's like whipped cream on a sundae.
Right.
It's nice to have, but I don't plan for it. So for me, it's cash on cash, or what I call yield. I spend the time figuring out what average is in my market. So Fresno, California is my market. 2021, the average is 5%. So what I do once I figure out average is I go try to get every deal I can at 6 or 7 or 8% cash on cash. That's hard. It's really hard when there's no inventory. I mean, to tell you how hard it was, I wrote 250 offers last year and got nothing.
Oh, wow.
Right. But that's not normal. 2020 was not normal. I still added 6 units, but that's because of my network and off market and all of that. But again, most of my portfolio was bought from the MLS.
Oh, wow.
That's right. Paradigm was bought out of the MLS. So I really do believe if you do the work and you learn average, anybody, full-time employees included, with 20 minutes a day could learn their market and, go find good or great deals. So that's what I am. I'm a cash on cash. I want my money working harder than average.
Right. No. And is the goal for you to eventually pay those properties off, and have the cash flow just continue to come in, or is it to sell those properties and go bigger, like you had mentioned it initially when we spoke?
Yeah. So I went through phases, so we'll go through them. Right. Phase 1 for us was just buy as many as we can. Kind of the whole idea is all ships rise. What does that mean? Well, that means I used all my cash, which I only had 40 grand to start all of this. All of that went in the first 3 houses. Then time happens. We were in an appreciating market. I did cash out refis on those 3 and bought the next 5. Right. So
Gotcha.
The next 5 came from those first 3. Then we did the 1031s, 8 to 80. But the whole idea for me was I wanted to replace our income. So it's cash flow. So my wife retired 6 years ago. I retired a little over 3 years ago. And it's a wonderful feeling knowing that our monthly bills are paid for from, rental income. So yeah, we went bigger, but that's only because we couldn't buy the next house. If you want to overpay for anything I own, I promise you I'll sell it to you. I'll just go put it somewhere else.
You might be able to do it right now. In fact, you could just cash out on everything, man. But then you'd have a situation you need to put money somewhere. So it's not all rosy out there. I
like them. My bills are monthly, so I like money coming in monthly.
No, you can't beat that strategy. I mean, I owned, during the housing crisis, I owned a property in Boise, Idaho. I used to have an investor. Prior to doing real estate, I was on the finance side. So I actually had over 10 years. I owned a mortgage company. I had an investor client of mine who owned at the time about 75 properties. And he would go in and he would find these hot markets of where job growth was going to happen and that was going to explode because of business and just people migrating there for a number of reasons. And honestly, he picked every single market before they all took off. The surprise Arizona, Las Vegas, Boise, Idaho, Lexington, Kentucky. I mean, every single market he did. St. George, Utah. I mean, he did it well. And he would go in and I bought one in Boise and one in Lexington, Kentucky. And they cash flowed fine. But when 2008 happened, 2007, 2008, I got scared. And I was like, you know what? I was a single guy. I was like, you know what? This is too much out there. I was in the mortgage business. I was like, you know what? I don't think I can do this. So ended up selling both. And now I look back on what in the hell did why? Like I wasn't upside down. They cash flowed. I was young.
Yeah,
immature. I didn't understand. And one of those.
Even the mortgage market back then had to be rough. I mean, it was. I remember Bear Stearns and like Countrywide and IndyMac, and it probably felt like the world was collapsing.
It did. It felt a lot like March of last year when you just didn't know what was going on, and we all knew it was what was happening. I was trying to get rid of everything that I didn't need because. And now I look back and go, small. Boise. I mean, that house is probably quadrupled in value just alone, not even the rent. I mean, it's amazing. But I appreciate you being here, Michael. If somebody wanted to get in touch with you, they wanted to start investing, what is your recommendation? I mean, how would they reach out to you, or where do you have them go to start that conversation?
Yeah. I think the best thing is to just type one rental at a time in Google. You should get my YouTube channel, website, book, all that stuff. I put out daily content on YouTube, 3 or 4 videos a day, 7 days a week.
Oh, wow. That's
I'm
awesome.
trying to give back. So
No, that's fantastic. So what I'll do is I'll link to Michael's channel below, so you can find all the information for the book on Amazon. We'll give all the links there so you can connect with him to get any information you need, if you have questions. Anything you want to add here on our last our
yeah,
last
what I
few
would tell
words, if you will?
people, yeah, what I would tell people is there's never been a better time, I think, to get into single family rentals. I really do think over the next 5 to 10 years, single family rentals is the place to be. I think there's a lot of changes and disruption, and bigger is better, and big multi. There's a lot of pain in office, a lot of pain in retail, but there's something that's very, this crisis teaches us things, and this one taught us that space is good. I want a place in the backyard for my kids and dogs. I want a garage for my office or my car. The whole suburban and rural flight is real. I think vertical living is seen its peak. So if you can go get 4 rental homes over the next 4 to 8 years, I think you're going to take care of your family in a pretty special way. So don't let all the negativity get you. Don't let all these tax changes get you. They're going after the 1%. Just wash it off. Go get your rental property, save it, and you'll be in a better spot.
No, absolutely, Michael. I mean, I think that's great advice. I mean, so for anyone watching, here wondering what thoughts are on the housing market, I say it all the time. As long as you have a longer term horizon, regardless, as long as you're not thinking my property is going to be worth next year and so on and so forth, and think of it as something that you have to have. It's shelter. You need it. I'm going to be here. I've got to raise my family, all that good stuff. You're going to be in good shape. And this is coming from somebody that's been doing this over 20 years and owns a lot of property, right? He's not out there panic selling, getting rid of it because he's worried about the world collapsing. He's actually trying to find more. So use that when you're thinking about what you want to do. But appreciate you all being here. I appreciate you being here, Michael. Great conversation. Check out his, content on YouTube. Again, putting a lot of free information out there. It can help guide you through the process as well. But for now, thank you for taking the time to watch. We'll see you again soon. Have a great day. Bye-bye.